Good afternoon, traders. It's Bill Baruch with Blue Line Futures. It's been a while since I've come to you, and I will try to keep it more regular going forward. We have a nice move in stocks today, pretty firm move in crude oil as well. So let's go through some of these charts, what we're watching. This is the S&P, the September futures, and I always talk about these inverse head and shoulders, or on the other side, a regular head and shoulders. I think this is a great profile to look at where some shorts were trapped here. So you have this inverse head and shoulders, really strong support at these levels, held through last week. But what was really interesting yesterday when we had that selling after Apple news is holding the 21-day moving average. You can see here, 21-day moving average held, and it laid some groundwork for a strength today to really start getting going. And I think the fact that we didn't get any follow through to the downside this morning, you had shorts begin to cover early on, and then I think fresh buying came in. So at the end of the day, we finished strongly and broke out above this downtrend line that goes all the way back to April. And then with the Netflix earnings, we actually pushed into that 50-day moving average through the end of the session. I think that 50-day coming in here at 39.25. So we closed right above it and then got a little extension on Netflix. So this is a good move, a strong move, and it lays the groundwork for the gap cover from that May CPI close on June 9th, going into the weekend, or June, before that CPI opened that day, comes into the weekend, 40.17. I think that gap needs to be covered. So that's the Thursday close before Friday's CPI release and opening lower. Now, the Nasdaq is what's really leading things higher here. You're getting a breakout above that downtrend line going back to May. Similar inverse head and shoulders, also holding that 21-day moving average. And then today really getting a thrust through the 50-day and then coming into that June 9th gap where we close today. Now, we put out research each day called the Morning Express, gives you levels and everything to trade for the S&P, NASDAQ, and more. Our major 3-star, actually rare major 4-star resistance in the NASDAQ is that gap close. Now, Netflix earnings should help give us a little power overnight, get through this. And, this is a good setup. We could start testing back to the upper end of that range going back to June. I think, again, you had shorts covering today. Now you're getting some fresh buying. If you look at Bank of America put out some of the research on how much cash that portfolios are holding as a percentage of AUM, and you're seeing this at 6% or 7%. This is the highest level, and it's been like this for a few weeks now, going back to like the early 2000s. So there's a lot of cash here that can go to work, and I think as we move higher, you're going to see fresh buying come in. Quickly going through the Russell 2000, very similar pattern. However, the Russell, you have this trend line resistance going back to March. It's testing it right now, so a lot of resistance right at around 1800. You have the similar inverse head and shoulders. Same thing with the Dow, paving that path up here in the Dow to that gap cover June 9th. But what's most important to me is watching how tech is relative to the staples. And this is something that we've been talking about quite a bit. Very nice bottoming action in the Qs relative to the staples. And this is going to tell you when you get these thrusts higher. Look at this thrust higher today out of this range. You get this thrust higher. It's telling you that people are taking risk. People are putting money to work, and tech is going to be a leader. So I think there's room here for this thrust to get up here. That's going to lead that NASDAQ, as I said, back to the potential upper end of this range, 12,750. So that's what we're looking at here, and the stocks coming into closing out on Tuesday and here for the rest of the week. And quickly, let's take a look at energy, because crude oil had a nice strong session here on the day. Let's look at the September contract, finishing above 100, but right at that 21-day moving average. If you look at the retracements, you got a 382 retracement. Yesterday was the high, and then today the 21-day moving average. So there's definitely some overhead resistance here, working through the damage, not to mention the gap from that July 11th into the July 12th. We opened up lower from the settlement pretty decisively. So got some resistance we're working through right now. And I think really, as crude is trying to find strength, other commodities are struggling to find that strength in the metals. I'll show you those in a second, but it's all about the dollar. And, this dollar is breaking down a bit, but has a lot of support. So it broke out of this ascending wedge and moved higher up to that 109. And we're testing into support, 382, a lot of support down, 106, retesting that breakout of that ascending wedge. So they got some support here. So, but if we break further, I think you really need to see a decisive breakdown through this July 5th move, where we really had some negative news in Europe powering it, 104.83. Get down through there. That is where commodities could really start to boogie. But look at the weekly chart, shows you the ascent here. Now this move from these 3 weekly bars, that's could be the potential of a blow off top. But again, we need to get and break down through this ascending wedge, and that 104.5 would start to give that confirmation. Now, where would we expect to see strength if the dollar continues to move lower? Obviously, gold, and it's really been a sad move here this week for gold, not moving off the low much. Now, there's obviously some support 1692, but if we really have to see this thing move out of this. It's got to show some life. You have managed money has now gone net short gold. And this has been an indicator going back to 2015, when as soon as hedge funds went short gold, gold bottomed. And it did linger for a bit. They got short in later innings, 2018 to 2009, early 2019, and there was limited downside. This is a counter indicator. Hedge funds have been net short silver. And I think, listen, we should see a pop somewhere in recovering silver back into some of this resistance, whether it's the 382, this trend line, the 21-day moving average. So 1960, it's about $20. We should see a retest in there if that dollar continues to weaken. One that we like a lot is actually shown better strength here relative. Platinum, a lot better relative strength to gold and silver here. Platinum has broken that downtrend line. You have the 21-day moving average, 880 or so. If gold and silver start showing some strength, I expect platinum to potentially start getting out above this level here, and that's where it could lead a rally out above 900. So again, a lot of it comes down to the dollar. We have a lot of charts to show you. Don't hesitate to reach out to us. Check our website out, bluelinefutures.com. You can email us info@bluelinefutures.com. We love to connect with you. Good luck and good trading.